Welcome back, everybody, to another episode of Take Back Control Tuesday. Now, I can't tell you what the outcome is going to be for each and every one of you, but what I can tell you is for the next hour and 40 minutes, the time we're going to spend together, if you apply what you learn, this will change your financial future. If you're here, that means you're ready for change. And tonight, that's exactly what we're gonna deliver. I've got a special guest for you. His name's Jason Sipple. He is a master of what you're gonna learn. But what are you going to learn? Well, Jason is gonna teach you three things. He's gonna teach you how to take back control of your money by being your own bank. And then he's also gonna teach you how to build wealth through your own debts and expenses. That'll be the second thing you learn. And the third thing you'll learn, hence the cars, you're gonna learn how to get all the money back for every single car that you ever buy, drive, and own. And before you get into it, one last favor, just click that button right there, the subscribe button. It would do me a huge favor. And also, right above is a little bell. Smash that bell so that every time I put new content out, you'll be notified. So I don't want to waste any more time. It's time for Jason to really show you all about the infinite banking concepts. Let's roll.
Take back control.
Tuesday night.
Tuesday?
What if, by changing just one thing, everything would improve in your financial life forever? Would you make that one change? That paradigm shift is the gap, is the space between what most people are doing in the US and why they are not financially free and what the wealthy are doing. And who here, little I in the chat, who here wants more money? Anybody? Who here wants more control of the money they have? And who here wants to be like William Wallace, paint our faces blue and go, freedom? Anybody? I'm going to let you in on a little known fact that the wealthiest families, like the Rockefellers and Walt Disney and Ray Kroc and others, have been using for ages, for decades, for centuries, and it's simple, it's legal, and it's available to each and every one of you. And it all starts with changing that one thing. Where does your savings, your surplus money, the money that you pay yourself, go first? And shockingly, we're giving away a big chunk of our money to the banks, to Wall Street, and to the government, to our friendly Uncle Sam. And when you learn the rules of the game, we can change all of that. But it takes time. This is not a get-rich-quick scheme. So today, in this training, we're going to dive in. I'm going to show you, or we're going to agree on some different definitions around money, making it simple as possible. Then I'm going to show you how we've been groomed to give up control of our money and how we can all get a 35% raise by changing that one thing. And from there, I'm going to tell you exactly what this specially engineered whole life from a mutually owned dividend-paying company, the infinite banking concept, looks like and why we do it with this vehicle. We're going to lift the hood. I'm going to show you how you can make money with every car that you ever buy, drive, or own. And I'm going to show you a case study of a client who was almost $500,000 in debt, $5,777 a month, recaptured in less than a third of the time, saving a ton of interest, protecting his family, growing his money guaranteed, and using it to bring back all the wealth to his family. It is as simple as changing the one thing. So who here would like to learn all of those skills? If you're open to keeping an open mind, to having some fun with me here today, to write in your notes in the chat, say aye, and let's rock and roll. So now, a big part of this is our thinking and our ability to visualize. I want each of you to imagine, close your eyes if you need to, go into space and just see yourself sitting there in a room with 100 17 and 18-year-old high school students that have just graduated. And now they are so jazzed about the future They've gotten through high school. They've done amazing. They know what they want to do next. And I ask them a simple question, at least I attempt to. I say, hey, who here feels like you're going to be financially successful by the time you're at retirement age? Their hands are going to shoot up. They're going to jump out of the chairs. And they're going to say, Jason, me, call on me. I'm going to be the next Mark Zuckerberg, right? The next Elon, maybe the next Trump. I don't know. They're going to be the next wildly successful person. They see everything is possible because the truth is, everything is possible when we're creators. But then something insidious happens, something awful. Something happens from the time they graduate and the decades to come. And this shocking statistic from the Social Security Administration shows what happens. And what does happen? Pop in the chat. We conform. We give up on our dreams. We do what everyone else is doing. We take jobs. We manage our money on a month-by-month cycle. And somehow in the greatest country, the wealthiest country, where people are dying to get in, they're putting people on planes and having them leave the country right now, which is awful, but people want to be here. So we all need to understand, if you're here in this webinar, you are the 5%. You're not the 95% destined for failure. You're the ones that are willing to ask a better question. You're the ones that are looking for financial freedom, not just for yourself, for those around you. Because guess what? When we create, it gives more opportunities for everyone. Whether you're giving someone a job, you're able to take care of sick family, you're able to help family out when they're going through big things. This is what we talked about, me and my beautiful wife, Patty, talked about in our money meeting today. And so what we're going to show you today is exactly what the wealthiest families have been doing and what we have helped over 18,000 people and counting and going up daily change their lives. Change your life. So who am I to share this? Well, before we get to that, let's talk about this quote. I want you to think about this, write this down. If you haven't heard this before, if you're new here, please capture this quote. The problem in America isn't what people don't know. It's what people think they know. It just ain't so. Think about that. The problem in America isn't what people don't know. It's what they think they know. It's what they think to be true that's not. That is keeping us in that 95% unsuccessful. And so today, I'm going to tell you a lot of things and show you a lot of things about money that are going to be hard to accept. You'll be, no way, Jason. But just be open to it. What's there to lose because you're here because you want more? So again, who am I and why am I here? When I get to this slide, I never know where I'm going to start. I don't know what story I'm going to tell you. But what's on my heart and my mind today is I'm someone who loves people. I love having conversations with people. I love helping people. And if you ask my youngest son, who's 10, what stage of my life I'm in now, he might say I'm a VMAX Pokemon card. But I've went through all the stages from being a fine artist, a professional medical illustrator, a recruiter who's placed over 3,000 people in better jobs. I built a $25 million recruitment division, making $180,000 a year. I've been a peak performance coach and coached some people that have started huge businesses, CEOs, COOs, and I knew nothing about money. I thought I could do what my parents taught me, to show up first, to leave last, to work hard, to be humble, to add value to others. Who here can relate to that? Who here can relate to that? And guess what? That is the definition of an amazing employee. An amazing employee. And if we have amazing employees here, that is fantastic because we're doing the right thing by ourselves and others. But it means that you might not know the rules of the financial game. And that's where I was until 4 years ago. I broke down, and I can't even help but getting choked up just thinking about it. I broke down in the back of a mastermind and just started crying when we were all doing our big visions, our big dreams. And I realized that the path I was on had no freedom. I had no idea how I was going to provide for my two sons, for my wife, for my family in Ecuador, for my parents, for all the people I loved. And I was barely able to take care of myself. I felt that way at least. And so I had to push my ego down and ask for help. And I asked a close friend of mine. And I said, hey man, I know you've talked to me about money before. You've told me some stuff. You're the first financial advisor, fiduciary that's ever made sense. That I trust you. I like you, man. Give me a financial philosophy. I've got philosophies as far as how I take care of my health, my spirituality, as a father, as a husband, but I don't know anything about money. And he handed me two books, which you got to wait a second. I'm going to show you both of them. I was about to show you, but he handed me a book. I read it in one night on a Tuesday, and cover to cover, pretty impressive, right? Not really. Giant font, big pictures, pretty easy reading. And I read it and I got really mad, really upset. And so I read it again the next day. And then I called him like any normal person would, and I cussed him out. I was like, yo, B-Reps, what the bleep? Why didn't you tell me? And he said the most profound thing. This is where 95% of people are. Sip, you weren't ready. And so here I am 4 years later, started out $114,000 in debt. Now we have paying for our ski vacation, which will leave Saturday with my son's policy, and we have passive income for the first time in our lives. And I'm not telling you that to impress you. I'm just impressing upon you that that's all been done in less than 48 months. So it is possible if you change the one thing. So who here is ready to jump in? Let's talk about some of the other people who know about this, share about this, but they're not out there speaking about it constantly. One guy has a rich dad, poor dad, and I've already put his book up there. Robert Kiyosaki in Second Chance talks about this. The big man who has changed my life profoundly talks about it in Money Master the Game in section, I think, 5.2. And then you have the book I was talking about, the one that changed my life. I think it should be next to everybody's Bible, the most important book that's ever been written to show you the rules of the game, Becoming Your Own Banker by R. Nelson Nash. I am forever grateful for him, the Nelson Nash Institute, and for all of my peers like these guys, Brent Kessler and Chris Naugle, writing their stories and mapping out the millionaire mystery, which is what we're going to show you today. How can you go from someone that's in debt to within a fairly short period of time, knowing that you can be a millionaire if that's what you want? And then Chris, because he's really someone who sees the big picture and he's a creator, he understood that you have to move money to make money. So he has the Private Money Guide. And these books are available through us. So just ask. We can get you a PDF copy of those. And then let's talk about this intriguing concept, the backwards bicycle. Put a me in the chat if you've seen this video and watched the whole thing before. And let's just talk about who learns quickly. Who are the fastest learners in the world? Why, it's our kids, right? Kids are like sponges. They pick up everything. You know, they pick up everything. They learn so fast. So when we put them on the bicycle the first time and they push down, the bike goes forward on the pedals. When they turn to the right, they go right. When they turn to the left, they go left. And then when we let go of them and they fall, they're like, what the heck, mom and dad? I didn't know you were going to let go of me. But then they get back up and they do it again. And they start to learn how to ride a bicycle. One of my favorite things to do. So one of the reasons I'm so pumped up today is because I got up 3:55 because I was so excited. And I was like, oh, I hope I didn't miss my alarm because I really want to go on this ride and ride this new gravel bike. And then I went out and rode. And when I saw this, who here thinks they could ride a bike that if you turn right, you know, some welder made this up for an engineer as a trick. If you turn right, the bike goes left. If you turn left, the bike goes right. I think I could do it, but if you watch this whole video, it's going to talk about our neuroplasticity. It's going to talk how we learn and how long it takes us to unlearn something that we've learned. And that's why this is so powerful, because it is just a paradigm shift. And what if everything you've been taught about money isn't true? What if everything you taught about money is like the backwards bicycle, where it's just not working the way that you thought it does? But then you could learn how to make it work for you. So if you don't know what I'm talking about and you don't know what this is going to show you today, if there's anything that pops up, just remember this phrase and write this down. If you don't know what I'm talking about, just say, I give myself permission that I don't know this yet. And then money has two parts. Let's talk about the big wealth killers. Okay? The biggest wealth killers are what? Things that we don't know what they're going to be in the future, right? They are inflation. They are taxes. They are market variability, and they are interest. Okay? Or I like to actually say, and lawsuits, if we're a business owner. Those are the things that we can't account for that take a ton of the money that we earn. And then we have the mindset. And you can hear it with your words. Just keep it this simple. When you hear yourself and you feel an emotion that is anything less than empowering, there's a rule there. What is that rule? I had that experience today in our money meeting where I started getting upset. And I was like, wow, interesting. Why am I upset right now? Because our mindset. We follow the status quo. We have fear that we're going to fail. We have fear that we're going to be rejected because we don't do what someone needs us to do or what we think they need them to do. And so when we find ourselves in those patterns, that's not the time to make a decision. Never act from a desperate place. Use that energy to drive you forward and to learn something new. And one of the lessons, one of the books I didn't show you is this book, which is the Personal Economic Model. This is another great model, and they use pipes and visual, and that's why I like it. And he really goes through and talks about taxes and insurance, and basically, if someone can take something from you, it kind of means you don't own it, right? Like if it's an insurability thing or something else. And the philosophy on the cover of this book says there's more to be had by avoiding the losses than in trying to pick the winners. So think about that. There's more to be had during your lifetime, more wealth to be gained from avoiding the losses than trying to pick the winners. Basically, play it safe, play it guaranteed, and then go find something you know, like, and understand to make your money grow. So we got to put our money to work. So let's talk about the mysteries of money. What is the definition of money? What's the definition of money? The last title, Jeanette, and Yvonne, was The Personal Economic Model. I didn't write that book. It was written by Don Blanton. But great book, The Personal Economic. There's Tess, the leader. I love it. A means of exchange. That's it. Money for food, food for money. Money for computer, computer for money, money for car, car for money. It's just a means of exchange. It is hard to carry around cows. I know, because I tried it. Not really. What company uses compound interest? Think about this. Everybody's hands are going up. Ooh, me, calling me. The banks? No. The banks pay us interest, but they don't pay us compound interest unless we leave the money sitting there and don't pull it out. It gets interrupted. So think about this. If you go to a bank and you deposit your money and you put $100 in and you write your name on it, Tess' name on the bill, she hands it to the person at the counter. They go back to Tess's safe and put the money in the safe until Tess needs the money, right? No, that's not what happens at all. As soon as we make a deposit, it's a liability. And as I'll show you later how the banks make money, banks have to move that money and to have the money in motion to make more money. And then, are your dollars worth more today or in the future? Today or in the future? Your money is always worth more today. If you have a hard time thinking about this, think about when you were a kid, whether you're my age at 50, older, younger. Think about how many candy bars you could buy with $1 when you were a child, when you were less than 10 years old. How many? I could probably buy 2 to 2.5 candy bars depending on the size of the candy bars. Right? And besides, I think there's one size of candy bars back then. I don't really remember like how much Snickers were back then, my favorite one. But it's a lot less than now because now they're giant, they can poison us more, and they cost like $3 or $4 for a candy bar. So our dollars are worth more today. When I started driving, gas was 95 cents or 93 cents a gallon. Go find that somewhere. Taxes, they going up or down? Who's got a crystal ball? Are they going up or down? See, Miss Mark said king size was 99 cents. So are they going up or down in the future? Up or down? And think about right now, this might sound crazy to you, but we are in one of the historically low tax points of our history. If you don't believe me, just go look since 1913, the IRS taxes and where they go. Right now, we're at a lull. We're at a low point. Now, if you go to usdebtclock.org, we are $36 trillion in debt, and we're scheduled to be another 10 trillion with a T dollars in debt within a year. So when you retire or when you want to stop working, then our tax is going to be higher than lower. Because remember, the government doesn't make money. I don't know the answer, but if I'm looking at the big Sharpie on the wall, the big painting on the wall, I believe they're probably going to be higher, right? And then what do you know about your retirement account? I'm talking about your TSPs, your 401ks, your IRAs, your backdoor Roths, whatever you have that you're storing money in with the government because you're deferring or postponing your taxes. If you were like me when I was building that division or when I was recruiting, I didn't know anything. All I knew is when they asked me if I wanted to take on more risk, I didn't know what that meant. When they asked me if I wanted to work 10 more years, I knew that answer right away, but there was never a door number C. So if we don't know what's happening with our money and the only guarantee is it's not going to be less than zero, how excited are you? I asked someone this the other day. I'm like, let's look at the variables. Does anyone here know how long you're going to live? You know when your last day is going to be. The actuaries in a life insurance company might, but we don't know. We don't know how long we're going to live. That's variable number one. Variable number two, taxes higher than lower in the future. We don't know. What's inflation going to be in the future? We don't know. What are, some of the other, like, what is the cost of living going to be in the future? We don't know. We don't know any of these things. So how can we possibly know how much money we need to build up to be able to sustain us without going back to work? We don't know these things. So we need to start looking at the rules. And now I know this is a lot to take in. I know some of what I said might be a little uncomfortable, but it's okay to be uncomfortable now rather than getting to the end and being like, oh my God, I wish I would have looked into that discomfort at this time. So just hold the space that you might learn something here. Like I said, to change one thing, to change everything. So what is the money multiplier method? It's only 3 parts. Let me show you what the 3 parts are. First, it is the machine. And the machine is what I will share with you in a moment. I've already talked about it a few times. And then we have the marathon. If you guys know anything about me, I don't love running, but I will run after I swim 2.4 miles and then I, bike 112 miles, or Chattanooga 116 miles, because then I'll go run 26.2 miles. But it's long term. The whole point is it takes a long time. And then we have the millionaire mystery, right? We have mapping this out for you. So maybe you want to be a multimillionaire. Maybe you want to be a billionaire. I don't know what your goals are, but don't limit yourself because of what I'm telling you. And what is the machine? Oh, this is when it's like, oh hum, the machine is not, what I'm teaching you today is super boring. And I apologize. Try to make it fun, try to bring some life, but it's nothing more than dividend paying whole life insurance from a mutually owned company. That's it. Specially engineered whole life, specially designed cash rich whole life. You've heard it called all these things. Privatized banking systems through whole life. That's it. But what is it not? We are not emphasizing not, N-O-T, talking about IULs, VULs, ULs, or term. Yes, these might be a vehicle for other things. They are not, however, a vehicle for banking. We will not be talking, how can I use my IUL for banking? There are too many variables and you're not in control. I don't want that for you, period. If you're a Nelson Nash certified infinite banking practitioner, we can't use IULs or any of these other ULs to set up a policy for you. So think of that. Why would they restrict us when all we're doing is being a practitioner representing R. Nelson, who wrote Becoming Your Own Banking? So we're just going to mimic what the wealthiest has done. We're going to mimic what I'm going to show you in this fun interactive exercise here. So time to be interactive, everyone. Grab your pens, grab your papers, grab your crayons, grab your markers, grab your paint, whatever you want to write with. Grab your finger paints. Top left, you're going to write the bank. Top right, the policy. And Tess is going to give you all a drum roll. So imagine Tess giving you a drum roll as we go through each of these. So under both of them, we're going to write the word liquidity. Please define liquidity in the chat. And you guys can judge each other and help each other, guide each other. Define liquidity. Liquidity to me, I think of water. I think of it moves and goes where I need it to go, but it's just accessible. It just means it's not locked up in financial prison. Uncle Sam hasn't put these restrictions. I talked to someone yesterday with his TSP. He's like, oh yeah, between 60 and 63, I can even put in more than the maximum for that period of time. I'm like, you can't do more in 64 or 59? No, just those 3 years. That's a weird rule, but okay. So it's locked up until you're that old and then you can do X, Y. Like, why are these rules? We want the money to be accessible. Then who here has a high yield or a money market that's paying them more than the conventional bank's 0.07? The 0.07. We always have a couple people here with 3.5, 4.4, 3.88. There you go. Anthony, thank you for being that guy that I needed right at the right time. So put Anthony's 3.88. Forget the 0.07. Go ask Anthony where he has his money and put it there. And then under the policy side, we're going to write 3.25%. You're going to make a little asterisk and you're going to say first guarantee. Remember how I promised you some guarantees? That's why Brent Kessler always jokes around and said, no one's ever mad at us. But now let's look under bank. The next line, we're going to write taxable. Anthony's 3.88%, that's all taxable. That is taxable every year, right? The growth is taxable. Under policy, we have tax-free. Tax-free growth, tax-free loans, tax-free distribution without Uncle Sam involved. And that's what we want. Remember, this has been around longer than the IRS tax code started in 1913 or the Federal Reserve, which is not federal or a reserve. You go look up that yourself. Then under bank, we have unstable. Jason, not stable. Which one is it, guys? I never know. But whichever you want to write, whichever is grammatically correct, right there. And all I mean is fractional banking. Go look how many banks have failed from 2001 to today. Go look how many banks failed in 2008, 2009. Go look at the biggest bank failure in our history, which is Silicon Valley Bank in the beginning of 2023. We're talking $204 billion bailed out. Who thinks bailing that out? Why do you think taxes are so high and inflation's so high? Why do you think so much money was printed? Whose cost is that because of how the banks operate? And then on the policy side, we have stability. I'm conservative. I don't know about you, but I want stability. I want a foundation that is not made of sand. I want a foundation that I know that as long as I do what I've agreed to do, it's going to work the way that it was told to me it would. And when I'm talking stability, I'm talking every company we work with, all the mutually owned dividend paying whole life companies that support IBC that we work with, all have been profitable every year over 100 years. This specific example, you can write 1, 4, 8 since 1877, 148 years. Is that impressive? I'm always impressed by it, and I've given this presentation a bunch of times. And then on the bank side, you have unprotected. What do I mean by unprotected? How many business owners do we have here? Are you business owners? You know, or you have your own business, or maybe you're a truck driver and you work for someone, but you still carry the insurance or doctors, right? We all know that there's liability, liens and judgment. If the money's in the bank, a good attorney can get it. Under policy, the money's protected against liens and judgment. So far, if we're looking at whole life, and I'm talking about the life portion, the living portion, we have tax-free growth, guaranteed growth that is in a stable environment, that is protected, that is accessible when you need it, whenever you need it, quickly. And then under bank, you have no death benefit. There's no cherry on top, nothing for the ones you love or the things you love or the cats you want to leave your money to. I don't know. Whatever you have in your heart that you want to give to, you're able to do that by creating a guaranteed legacy, which is the second guarantee. And so now Tess, who is the leader in our chat, and everyone else who's participating, you guys are awesome. We're just wondering if you guys, Anthony, I'm putting you on the board of directors with Tess of a bank. You guys are looking at this chart, same chart I'm looking at. Which side are you keeping your money on? On the left or the right side? Just logically, just use your noggins. Left side, right side. Anthony's going right side. what if banks agreed with Anthony? What if banks have 4x the amount of whole life that they've owned since 2013? That's in the last 11 years. They have 4 times. They are the biggest purchaser. They're tier one money. Do you guys know how much whole life banks have? How much bank-owned life insurance they have? Anthony, I don't got to prove it. Look it up. 225 billion as of a Q2. Anthony, look up 225 billion of bank-owned life insurance and see what Google has to tell you. It's going to be Q2 of 2024. When I started teaching that chart, not that long ago, it was 180 billion. And so remember how I promised? Actually, I didn't talk about this in the intro, but this is going to show you. And Anthony, I love that you're questioning me. Please do the same. I want you to poke holes in this. I want you to go down the rabbit hole and do the research yourself. I want you to think for yourself. It's all about our thinking. And so what I'm going to do right now is I'm going to ask you guys to trust me as Jason, the honest banker. I'm going to ask you a question, and you have to tell me, am I being truthful or am I lying to you? So let's look. So I'm Jason, the honest banker. I'm going to work with Anthony on this one because Anthony, I like your questions. So Anthony, you've been leaving your money. You've been saving. Anthony has discipline. He saves. He pays himself first. He puts his money in his savings. That's his high yield. But instead of giving him 3.88, I got Anthony to come over because I'm giving him 4%. Okay, 4. Anthony's saving for a new car. He's very excited about the new car smell. You guys love that smell? I do. And I tell Anthony when he asks me, Jason, I need my money. Give me my cash. I'm going to go buy that new car. And I'm like, Anthony, that is incredible. But hold a minute. I'm going to ask you to keep your money with me and I'm going to give you a loan. I'm going to pay you 4. I'm going to charge you 6%. But at the end of the term, at the end of the 60 months, Anthony, you will make money. So here's the point where you tell me, am I an honest person? Am I telling Anthony the truth? Am I telling Anthony the truth? Anthony wants to know if I'm robbing him. Do you guys think I'm robbing Anthony? Anthony, you're fun. Sheldon thinks I'm telling the truth. Okay. Like Sheldon as in young Sheldon? Caesar says yes. Okay, let's see. Let's just see what the math tells us. Anthony, your car payment at 6% for 60 months is $483.32 a month. Okay? Your future value, you can use a future value calculator to figure this out. It took me, no lie, not exaggerating, 19 times to get this concept. That was taught to me by my mentor. I just couldn't figure it out. But the future value of the compounding uninterrupted growth at 4%, which most of us think is what? 2% less. But this is the problem of looking at percentages or amortized loans or what are all kinds of things. We have to look at the cash flow. That's what this is supposed to show you guys. So the question is 30,525 more than 28,999? Yes or no? Anthony, congratulations. You have a new car and you've made $1,526. I am excited that you chose my bank. I look forward to serving you in the future. Thank you for doing business with us. Because how, Anthony, is you are paying loans back on a depreciating scale and your money is growing on an interrupted compounding scale. It's just math. And so now, because I did such a good job for Anthony, he's going to bring $100,000 to the bank of Jason. Now I want you all to put Yvonne, Brian, Caesar, everybody put your name in the middle in your imagination. Just hold that thought because I want you to see multiple points. So Anthony brings me 100 grand. I'm going to give him 4% now. He just made money on his 25 grand. He's like, I'm going to double down, triple down, quadruple down like the banks and see how much money I can make. But as soon as Anthony makes the deposit to my bank, guess what? Is that an asset or a liability? It's a liability, right? And so what do I have to do? I have to follow God's plan, God's motion, the laws of nature, and I have to move the money. I'm going to lend the money out to a home buyer because I want to see people getting their dream home. I'm going to charge them 7%. Anthony, I'm paying them 4%. The seller brings back the money because it has to go somewhere. So they're going to deposit in my bank. Because remember, I'm doing really well by these folks. And now the new homeowner needs a new car. Maybe they have a 17-year-old, so they're buying a new car. Probably not a BMW, but it's 8%. And now the money's coming back. And now After being there for a little while, the wife is like, you know what, hon? This place is beautiful, but my dream home has big ceilings and big windows. Let's do a remodel. Let's renovate it. And so then I take a home remodel at 9%. No, the debt starts piling up, and now we got to consolidate debt because debt is predatory, right? It's not usury till it's over 29.99%. When it hits 30, it's illegal, but all the way up to that point, somehow it's legal. Right? The average credit card is charging 26.5% these days. So we consolidate the debt for a lower rate because we're just looking at percentages and what it costs on a month-to-month basis. And so now I've lent that money out at 12% because that's more risk to the bank and to myself as the bank manager. Now let's look at the spreads here. It's all about the spread, right? The bank lends us 7%. And we pay 4, we're making 3%. Next one, 8 minus 4 is 4. 9 minus 4 is 5. 12 minus 4 is 8. We add these to get together. Come on, slides, keep up with me. And we get 20%. How much bigger is 20% than 4%? Is it 16% bigger? Or is it 5 times bigger? Is it 5 times bigger? It's 5 times bigger, right? That means that I have made 500% while paying Anthony 4%. Who's winning? And whose money did I use to do this? And how much risk did I take on? Those are the questions I want you to walk away with today. At least say, I might not get this right now, Jason. I might not get this yet, but I do see how the banks are the most profitable businesses in the world. How cool is that?
You ever feel like you don't have control of your real estate business or your money? That's right. The big banks and the institutions, they're in control, right? I know you've felt that before. Private Money Club puts you back in the driver's seat. As members often tell us, it's a total game changer. Join the community of like-minded lenders and borrowers by going to privatemoneyclub.com and sign up.
Go look this up, Anthony. BauerFinancial.com. You can go look up at any bank, any credit union, any big bank, and it'll show you how much they make annually on the money you leave there. And the average has been between 400 and 1300%. That is wild. That is wild. You weren't robbed, Anthony. You just don't understand the game yet. I love, Anthony, your interactiveness in this is amazing. Now I'm going to go a little quicker through this. Remember when I promised a 35% raise? Does anyone want a 35% raise? Anybody? Jeanette, you want a 35% raise annually? Just think of what you make, times that times 0.35, and then put that into your pocket. If you could get a 35% raise in the first 30 days or within the first couple of years, like we'll show you at the end of this, then stick around. This is what you want to see. So right now I'm showing you people's annual pattern of spending. And I'm telling you from experience from 3,000 calls, people are spending way more than 20 cents of every dollar they make on their automobiles. We love our vehicles more than we are housing at some point. And so then we got 30 cents to each the house, 40 cents to our lifestyle and everything else, charity, whatever it might be. And then we got 10 cents of savings. Now, let's look what happens. Let's look how much interest, because the banks, remember how they are making a spread everywhere? What happens if we recapture the interest? That's what this exercise is showing you. What happens in an automobile? 5 cents of every dollar is going to someone else. Remember, them lending us money, an institution lending us money, is what? Is profitable. So they're making 5 cents of every dollar. We give that back to our savings. Now with the next one, the housing, if you've moved into a home in the last 7 or 8 years, please do not leave here. Do not go look at your mortgage statement. Do not, because you will not appreciate me. And I want you to leave here loving me and thinking, wow, that was so good. But when you go look, the banks, you're paying 70 to 80% of that mortgage payment to the interest. You haven't barely touched the principal yet. So it's 25 cents to the other side. And then 5 cents to everything else. So if you add those up, that's 35 cents added to the 10 cents we're already saving. Now we have 45 cents more of every dollar. This is what it looks like when you think long term, when you're in it for the long term, for the marathon. So just think of that. If you're able to move that to the other side, the volume of interest that's leaving your family by doing the way that we were groomed to give up control of our money, this is the problem. It's not how much money our money's making us, it's that we finance everything we buy. This is the problem. And most people will not care about the solution until they understand the problem. That's what R. Nelson Nash said to us. So now, remember when I told you I'm going to lift the hood of this beautiful truck and show you how you can buy this truck and get every dollar back for every car or truck that you're ever going to buy, drive, or own. Who here wants to learn that? Let's look over the hood. Look at that. Look, that's how much bully, Anthony. Thank you for showing that. That's awesome. Let's look under the hood. So there's a couple things we're going to define. Because remember we defined money earlier. Now, because when we see life insurance, we run out of the room, we scream because we believe it's no good. Even only a couple generations ago, 85% of Americans believed in it. It took care of the family, it protected us, and it's been around for 200 years. But when we make these deposits, when we pay our system, we're going to call them premium deposits because that's what they are. It's no different than putting money into your Bank of America, your Wells Fargo, your Chase, your JP Morgan, your PNC that Anthony just posted, okay? And then our age doesn't matter. People ask me all the time, Jason, I'm 52. Jason, I'm 63. Jason, I'm 71. Am I too old? No, you are not. You are not. The only thing we have to contend with is can you get approved for the insurance, which we can talk about, and where's your mind? How much do you believe? Because like Henry Ford said, you either think you can or you think you can't, and either way you're right. Okay. And then we're not really going to talk about the death benefit. I will mention it because it's super important to me as a father, but we're not going to spend much time on it. This is how you create the generational wealth by the long-term thinking, but it's not important to when we buy cars. I just helped two people from a mastermind I was in buy their vehicles. One bought 2 cars for $35,000 for his business, and one bought a new $35,000 car for his business as well. So let's look under the machine. Remember Anthony? He was being what? Discipline. He was putting his money in my bank. Anthony, you're doing it again. 10 grand a year, you save up 30, you take a $25,000 loan in year 3. Now the first rule of banking is be an honest banker. You just started this business. Why would you go out the back door and not pay yourself back? So now Anthony purchases this vehicle. He decides to pay him about what he was in the last place, but raise it a little bit. So he's going to pay $500 a month back to himself, back to his system for $6,000 a year. Everybody got that? 500 times 12, 6,000. After 7 years, Anthony has deposited $70,000. Whether he's doing it monthly or annually, it's up to him. He's paid himself back, whether he's doing it in a structured way or unstructured way, it's up to him. And now he's put $100,000 into this. He's taken a $25,000 loan. $75,000 is the total. But look, his cash value is still $67,881, meaning if you divide that by that, you get 91 cents of every dollar. So I've delivered on the first part, and now I'm going to get crazy. Now I'm going to have Anthony not put any more money into this system, which we would never teach you to do this. I wouldn't recommend this when you understand this, but he makes no more deposits. After this 5 years, his kids, friends, people he has driven around in this vehicle have made a mess of it. No matter how hard he's tried, it has stains, it has nasty stuff, and it does not smell new anymore, and he misses the new car smell. So he's going to do it again. He buys another vehicle. Same model, same make, but got a different color this time. And then this time he pays himself back again. He's an honest banker. The cost is the same. It's $5,000, right? The difference between $30,000 and $25,000. But Anthony's cash value has grown $23,592. How's that possible? Because of the uninterrupted compounding interest. So let's look at some rules. 3 rules. Pay yourself first as if your life depended on it, because it actually does. That's the first rule of wealth. Pay yourself at least 10%, like listed in The Richest Man of Babylon. Number 2, pay yourself with interest. Have a plan to pay your system back. And yes, newsflash, the insurance company is making money on your money, but I will show you when you talk to me in a 3-cup setup why it works that way. And then finally, recycle and recapture your money. Meaning keep all that money in your family. You saw in the second example, Anthony actually made money buying that car or that truck. So if this works for that, what else will it work for? Now, we're going to go through the scenario I promised. This is an actual client who came up to Brent and Chris, Brent Kessler, Chris Naugle, after their presentation said, "Can you help me?" And the first thing Chris said is, "I don't know." Because that's the truth. Until we know where you're at, until you weigh in financially, we don't know if we can help you. We don't know what your discipline is, how much you're paying yourself. And so this doc, this chiropractor, said, "Hey, I have $478,000 and change in debt. I pay $5,777 a month, almost 70 grand a year. Can you help me?" And we said, "Okay, how much are you saving?" He said, "I put about 25,000 into, as much as I can into this account." We said, "Okay, would you be willing to move where that goes first?" And he said, "Sure, if you can help me do this." Because look, if he kept doing the things that the way it was set up traditionally, he would have taken 19 years and paid a lot of interest. Look at that volume of interest and those interests. And so let's look. In year one, he makes a $25,000 deposit into his policy. He has cash value of $14,863. And what's he going to do with that? He will pay off the Discover, the Lowe's, and knock down the Nordstroms a little bit. So he's already recaptured this money. Just think of it as he's paying Discover, Lowe's, Nordstrom, Wells Fargo, private loan, Beamer, West Marine, condo, and home. Those are other families. This is how I think about it. That's money going to someone else's family, not our family. Now this doc has taken back charge of that. So he's got $448 a month coming back to him, which adds up pretty quickly. So now in year two, same thing. He hasn't worked any harder or any longer. He's just moving where his savings were going. Puts in the policy, gets the cash value. It's gone up. He pays himself back that $448 times 12, which is $5,374. He knocks out the next three loans and knocks down the BMW. Year three, this is going fast, right? Faster in 19 years. In year three, puts the deposit in. Now he's hit that efficiency point where every dollar has more than a dollar. And sometimes it happens sooner, sometimes it happens later. Just really depends on the specially engineered for you. It's putting that out there. Now he's recaptured $3,677. So in year one, he's put in 25 grand. Year two, 25. Year three, 25. He's taken loans each year of 14, 16, and 25,000 for 55 grand. How much does Anthony have left that is gaining uninterrupted compounding interest? You guys can do the math, right? Is it 25,000 or 20,000? Whew, that was bad math. No, bad math or not, I was wrong. It's all $75,000 that is still working for Anthony, getting him a guaranteed rate. Remember that 3.25% potentially, and most likely earning him a dividend and interest, since all the companies we have never missed. Can't guarantee it. Not a financial advisor, not giving financial advice, just saying what we do as a team. We drink the Kool-Aid. We're teaching you guys what the Kool-Aid tastes like, how you make it, how you do the things. Year four, another 25 grand into it. And remember, this has to fit your life, whether it's 2,500, 25,000, 250,000, 2.5 million. It just depends on where you are in your financial journey. Now, year five, look, he's almost out of debt. Now, something interesting happens here. He knocks out the condo, knocks down the home payment. We'll get to year six. And now, if I asked you guys, hey, can you put 16 ounces of coffee in this 12-ounce mug? You guys would say no. And that's what happened here to the doc. He couldn't fit anything else into that policy. It kind of reached its MEC limit. So he puts 10,000 in. It lets him have another $3,092 he can use towards this debt. He starts a second policy. I believe you guys were just talking about this. And thank you for helping John. But you were saying, hey, yeah, you can start a second policy. You can expand your banking system, your warehouses of wealth. And now you're making the payments back for a total cash value this year of 82 grand 633, which is more than he owes in the home. So in 6 years, the doc has recaptured $5,777 a month. Now, something that we do that's exceptional for everyone, we started this last year in 2024. We used to wait till someone's policy was in force, and then we would show them a debt blaster and show them how long it would take to pay off the debt and how long it would take to pay themselves back, so then they can go have the opportunity fund for whatever was next in their financial life. Now, as you go through underwriting, after you sign your application, After you do your paramedical, your height, weight, blood, and urine, if needed, our team will meet with you. They'll mathematically figure out, based on the debts you have provided, what's the most efficient way to pay it off, snowball, avalanche, highest interest first, and then they're going to lay the plan that your money mentor has designed for you, that you've agreed to, that you want to be approved for, on top of it, and they're going to show you exactly the roadmap, the destination. You're going to be like a captain that knows exactly where you're going, how long it's going to take, and how much fuel you need to pay off all the debts, how much interest you'll save, and how long it'll take to pay yourself back. That's exciting. I love when people have this tool, because then you have your roadmap and all you have to do is execute. Like Henry Ford said, think you can, think you can't. Either way, you are right. So I'm going to pause here and just let you know that progress equals happiness. So when we talk about your long-term goals, we want to tie it back to something that is manageable and something that is you can monitor as well, something that you can take action on. And so I love this question. I used to ask this all the time when I led a certain training. How do you eat an elephant? And my wife Patty reminds me, like all of you know, one bite at a time, but you don't start at the ear. Maybe we're making elephant stews, maybe we're making elephant burgers and steaks and salads, and we're freezing it so it lasts longer, putting some salt on it, but we have to do it slowly over time. The man or the woman at the top of the mountain didn't just fall there. And so is it possible to owe no man nothing? This machine works for debt and expenses and everything else. A lot of people come to me and say, Jason, I don't have any debt. Awesome. Now it's an opportunity fund. Now it's a way that you can use this and that to have your money working in 3 places at once. And it gets better if you continue to pay back the homes. Remember mapping out the millionaire mystery? I will finish and deliver on what I promised. Let's look at the condo. 879 times 251 months, 220,000. 1221 times 224, 273,000. Add them together, almost $500,000. And wait, it gets better. Add 4% to each of them, maybe even a little bit more. Now we've got $749,000 that has been recaptured back to his family. And so now that you know this, shouldn't everyone do this? Doesn't matter if you make 10 bucks an hour, 100 or $10,000 an hour. You need to be doing this. When I read Nelson Nash's book, I thought if this was true, every American would do this. And if you're in a place where you just don't have any savings yet, it leaves you 2 choices. Either go find a way to earn more money or tighten up the finances to where you can save a little bit more money and just be patient because you're just not ready to do this yet. As Warren Buffett, who's sitting on $277 billion in cash last time I checked, if poor people would just do what rich people do, they wouldn't be poor anymore. And only one of 2 things is going to happen in our lifetime. We either live, or I got news for you. I'm sorry. I didn't mean to do this at the end of the training, but we're going to die. Okay? At some point, we're going to die. I talked to the great biohacker who told me he's going to live 180 some years, but still, there's an end date. It is a finite journey. So are we better with or without this, whether we're alive or dead? I think this should be called the living bank system with a death benefit, but it's called specially engineered whole life. So if you guys want to take action, like I talked right at the beginning before I jumped into the presentation, life is about the actions and lessons we learn from taking action. It's not about just learning, we have to apply. And you have 2 choices right now. You can either continue learning. We have so much information. I do a webinar every Thursday. We do an Ask Me Anything every Wednesday at 4:30. And we also have a ton of other shows that Chris and Steven and other ones my peers are doing every week to just serve you and your journey. So go subscribe to all the channels, smash the like button, participate, ring the bell. You guys are awesome here today, but either scan this code, book a call with me. If you want to book a call, you can grab my calendar here. That's right, Jim Harbaugh. That's exactly right, John. And so now that you know what you might not have known before, what should you do? Whatever you do, I am grateful for you being here today. You are in that 5%. You are investing your most valuable asset, your time, your focus, your energy. And I am super grateful and blessed to be part of your journey. So have a blessed rest of your Tuesday. Until next Take Back Control Tuesday, which won't be me next week, but you're going to get another one of my peers. They're going to knock it out of the park. They're going to keep teaching you. And next time I come back, my challenge to myself is I'm going to mix this up. I'm going to show you some different things, and we're going to keep having fun together because we're here to support your journey. Be blessed. Thank you all.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.